What's up, guys? Back with another video. This is the Mighty Indexers, and I am more than happy to make more of these videos because I feel like people really need to start seeing the writing on the wall. And a lot of these YouTubers paint buying individual companies as the holy grail. It's fun, it's all fun and games, but let me show you this. On the right side, we have IBM. On the left side, we have a S&P 500 ETF. This is called SPY. This ETF tracks the top 500 companies in the US stock market. Now, the top 500 companies are always changing, right? At one point, IBM was one of these top 500 companies. Now, I think it's still an S&P 500, but it weighs a lot less than it used to in the past. So again, this is the beauty of being an index fund investor. As companies become less relevant, like IBM, they weigh less in your index and you end up still performing well. If companies like IBM crack the code for quantum computing and are worth $3 trillion in the future, which who knows, right? We saw what happened to Intel coming back from the brink of death. But if that were to happen, it would also be in your index fund. So you win both ways. Now, let me show you this. We got the 1 year chart, the 1 year chart. The difference is pretty clear. One is up 20%, S&P 500. One is down 17%, IBM. Again, just like in my last video, the 5-year chart is kind of shocking. So the 5-year chart for SPY, S&P 500 ETF, is up 71%. IBM is up 108%. Now, again, this is 1 year and 5 years. That's a pretty small time frame. But when you hit the max, now this is when you start seeing a much clearer picture. You see two graphs. One on your left, the S&P 500, is a very clear straight line up. Yeah, there's ups and downs in between, but it's nowhere near IBM. Now let's compare. We're going to take a look at 2016. So June 2016 to today, it is up 264% for the S&P 500. June 24th, and then June 24th, 2016 for IBM. All right, that's as close as it's going to get. We're looking at 90% gain. Night and day difference, guys. Even when you go back further to the Great Recession, you're looking at right down there, March 13, 2009. You're up 873%. Same deal, March 2009, 209%. Let's go back even further. Let's go all the way to 2003. 2003 to 2026, this is 23 years. The S&P 500 is up 641%. And then September 2003 for IBM. All right, that's about as close as it's going to get. You're looking at 254%. So in 1 year, 5 years, 10 years, and even, Great Recession and 23 years later, what you have is a underperforming company. So again, guys, the reason we make these videos is to educate people about indexing and the risks of buying individual companies. And the risk is if you have money put away and you're underperforming the market, you're losing money. You could have made more money just buying a simple index fund. So if you have family and friends who, like I said in the last video, like to buy individual companies, please share this channel to them. They might benefit. And please subscribe and like the video. Have a nice day.